Hey everyone, this is Anna from HotOptionBabe.com, and I want to wish you that you all have a very, very happy new year coming up in 2011, and that you had a great Christmas. Up on the chart, I have the screenshot of the Emini S&P futures, and what I want to go over with you is the reason I think we're due for a pullback. I don't believe that the correction is due just yet, but I do believe we will have a pullback this coming week. And we will watch some of these retracement levels that we have as support levels for that pullback. I do ultimately think we'll probably see around this 1313 Fibonacci retracement level on the upside. That will be 78.6% of our move from 1489 high to the low of 665.75. I'm just going back that far because to go back farther than that, things get a little skewed. So let's go ahead and take a look at what we have here. Okay, pull this over here. I like to be able to move my charts around so I can see them. Okay. So you can see that when Ben Bernanke came in right here in August, this is where he put the put into the market. And that's when we started shooting back up with his quantitative easing, which produced an inflationary reaction in the stock market and all commodities. So what you really have is a faux recovery, because it's really not coming from people, it's only coming from the government and what they're hoping to do. Looking at it from just a perspective point of view, they're trying to play this timing game where they hold it up long enough that people feel good, they start spending money. We had the best retail season ever this Christmas, and that's because people think, artificially think, that they're safer and that they're worth more money because the people that are in the stock market are seeing their stocks go up, they're feeling better, so they're spending more money. But the reality is we have a terrible unemployment rate. We still have housing that's probably going to go down a little bit more this year, and we'll see what happens. It's a crucial timing that he has to play, and from what I've ever seen, it's never really worked. So he's probably going to get caught in big trouble. We've seen copper at new highs, gold at new highs, and silver at new highs. Now gold, if you do the, there are new highs for the past since 82. I don't know what the year is, but since I've been around trading, they're at new highs. So what can we expect in the near term? The longer term, I expect a correction to be coming up here, with a lot of people a lot of people saying in February. I think it probably will come a little bit sooner. So it's really hard to call tops and bottoms, and I try not to do that. I just try to look at what I see in the short term. Now, here we got the daily chart, where you can see that we're really overbought in the stochastics, and it's just starting to roll over here. Your signal here is this divergence that you have on this MACD histogram. That is a signal that they're running out of sellers. Okay, it is a holiday season, so you could argue the fact, well, there's not a lot of volume. That could be part of it. We'll find out a lot more when this week is over with. So we're looking at the daily. I think this week we're going to see a pullback. To where exactly, I just really will tell you that I don't know, and I don't think anybody can tell you they know. What I'm going to show you is what I think might happen. Okay, your hourly is actually pointing up, but again, this was from last week, and there was no volume at all. So let's look at the Fibonacci retracements from 1172 up to, what was it, 1255.75, I think. 1255.75. Okay, I'll fix that in a second. See if we can get this. Oops. Pull this in here, pan this down a little bit so you can see better. There you go. Okay. And then I'm going to get this was 1255.75. I'm trying to edit the properties here so they're exact. 1255.75. And what was it? What did I say it was? 1,000. It was 1,002.75. I'm just guessing, but it's probably about right. Okay. And we're going to hit OK. And boy, that moved everything around a little bit. Okay, so I'm going to pull this in. What did I do? Oh, I'm trying to do the... Let's go back here again to... That wind out there is crazy today. It was supposed to be 1172. I'm sorry, 1172.25. 1172.25. 1172.25. And these are the levels that we're going to be looking for, okay? We're going to be looking for, okay, 1236 is a support level. 1223 is a support level. That will be tough, I think. I don't think that's going to happen just yet. I think we got, I would look for around 1236 is a definite area that could easily, we could retrace to, which would be about right here. And we'll see what happens. Like I said, I'm looking for a correction, a much bigger correction that'll take us under 1200 sometime in late, I'm going to say sometime end of January. I could be off, you know, nobody can be for sure what's going to happen, but that's what I'm looking for. Here's a view of the daily again, just at least to come down and sell off a little on these oversold levels. It's really overbought levels. So we'll see if we can get even a 23.6% retracement level, which would be 1236 on the E-minis. Okay, so keep everything in mind, keep an open mind as the holidays. If you'd like to try the lounge this year, make some money. We're bullish and bearish. We do all kinds of stuff. We do options, we do futures, we do Forex. And if you can't be in there all the time, we have email alerts and text alerts that come to your phone so that you can be aware of what's going on when we enter and close a trade. And I wish all of you a very happy new year, and I hope to see you soon. Bye.